Let's talk about the FHA 203K renovation loan and why the 2024 update changed everything for buyers in 2025. So if you've been searching for homes, you've probably noticed the move-in ready ones get multiple offers and the ones you can actually afford need work. A roof is near its end, a kitchen that hasn't been updated in decades, maybe plumbing that's original to the house. Most people walk away from those homes because they think no bank will finance that, but that's not true anymore. The FHA 203K program was built for situations like this, buying a home that needs updates, and it just got its biggest overhaul in more than a decade. So today we're going to clear up what the 203K loan actually does, what changed for 2025, and how it can help you buy a home with potential without taking on extra debt. At its core, the FHA 203K lets you buy a home and finance the repairs or renovations all in one mortgage. You don't need a second lien, you don't need to pull out a credit card, you don't need to wait years to save up for updates. You close once, make one monthly payment, and a part of that payment covers the funds that will be used to fix the home. So those repair dollars are placed into an escrow account controlled by your lender and released to contractors as the work gets done. That means you can buy a home in the neighborhood that you want, even if it needs improvements, and still finance it just like a standard FHA loan with as little as 3.5% down and flexible credit requirements. That's the purpose of the 203K loan, to turn a home that needs work into a financeable home you can actually live in. Here's what changed for 2025. For years, the limited 203K program had a rehab cap of $35,000. That sounds okay until you look at today's cost of materials and labors. $35,000 barely covered a kitchen and bath update. So as of November 4th, 2024, HUD raised that cap to $75,000. That single change instantly makes the program practical again, and it means you can replace the roof, update the kitchen and bath, or upgrade electrical and HVAC all within one loan. HUD also extended the time you get to complete projects. So limited 203K, now you have up to 9 months instead of 6, and a standard 203K up to 12 months instead of 6. So they even allowed borrowers using the limited version to finance consultant fees for the first time. These changes might sound small on paper, but they make a real difference to buyers today. You can do more with one loan and less out of pocket. Now let's break down how they work. First up, the limited 203K. Think of this as the update loan. It covers non-structural repairs, projects that improve the home but don't touch the foundation or major framing. You can use it for kitchen and bath remodels, flooring and painting, roof replacement, energy efficient windows or appliances, HVAC and plumbing updates, accessibility improvements. The repair budget can't exceed $75,000 and the work must be done within 9 months. There's no minimum repair amount, and you usually don't need a HUD consultant unless your lender requires one. It's fast, it's streamlined, and now it's realistic for the cost of modern repairs. Then we have the standard 203K. The standard version is for larger projects. Anything structural or additions, foundation repairs, major layout changes, or homes being moved onto a new foundation. Here are the basic rules. Minimum repair budget of $5,000. No maximum other than the FHA loan limit for your county. So a HUD-approved consultant is required, and the funds are released in stages as the work is verified. Full 12 months to complete the project, which is different from the previous version. This is the version for buyers who want to customize deeply or bring a home back to life that needs major repairs. Here's what the timeline looks when you use a 203K program. Step 1, pre-approval. Your lender reviews your income, credit, and goals. They'll also estimate your maximum loan amount based on the home's after improved value. Step 2, you find a property. The home must be 1 to 4 units, your primary residence, and at least 1 year old. Step 3, collect bids. You work with licensed contractors to get detailed estimates for each repair you want done. And if using the standard program, your HUD consultant helps inspect the home and prepare the scope of work. Step 4, appraisal and approval. An appraiser values the home based on what it will be worth after the renovations. Your loan is based on that future value, not the current condition. Step 5, closing. You close on the home and the repair escrow at the same time. The money for the renovation is set aside and paid out only as the work is verified. Step 6, construction. Contractors get paid in stages called draws. For larger project, your HUD consultant inspects progress before each draw is released. Step 7, completion. When everything's finished and approved, the final funds are released and you move into your renovated home. That's it. One loan, one payment, and a phone. That's it. One loan, one payment, and a home that finally matches your vision. A 2 or 3K loan covers almost any permanent improvement that adds value or brings a home up to code. You can use it for structural repairs, modern systems, energy efficiency, and cosmetic updates. You can't use it for luxury items like pools, tennis courts, or outdoors kitchens that don't add appraised value. It's a loan for livable improvements, not lifestyle upgrades. Here's how the cash flow works once you close. The repair budget sits in a controlled escrow account, and contractors submit invoices after each phase of work. The lender or your consultant verifies the work and approves the draw. Then the payment is released. No lump sum payments up front, no risk of unfinished projects. The system is built to protect you and the lender. The housing market is tight. Inventory is low, prices are high. The 2 or 3K loan update gives buyers another path, a way to look at homes that need work and see opportunity instead of problems. For years, the program was too limited to be useful. Now it's flexible enough to handle real-world projects. That means more options for first-time home buyers, more possibilities in older neighborhoods, and a better chance to build equity through your own improvements instead of paying a premium for someone else's flip. This loan fits buyers who can see potential and have a bit of patience. It's for first-time home buyers who want to create equity as they go, for homeowners who want to modernize without moving, for buyers who are okay coordinating a few extra steps to get the home they want at a better price. It's probably not for you if you need a move-in ready home next week or if you don't have time to manage the details. But for most buyers who want to buy smart and build value, it's a powerful tool. Let's dive into the pros and cons. The pros: low down payment, 3.5%, flexible credit standards, funds for repairs included in the loan, new $75,000 cap for the limited version, longer timelines for completion. Now the cons: more paperwork and steps, a longer close time, extra inspections and approvals. Interest applies to the entire loan amount from day one. But for the right buyer, those extra steps lead to a home that's worth more and it fits your vision. Let's pretend you find a home for $300,000 that needs $50,000 in repairs. With limited 2 or 3K, your loan amount is based on the $350,000. Your down payment is 3.5% of that, so $12,250. Your contractor is paid through the repair escrow as the work is completed. So you move in once it's safe and functional, and your monthly payment covers everything under one loan. If the repairs raise your home value to $400,000, you've built $50,000 in equity using a program designed for that exact purpose. That's how smart buyers use the 2 or 3K to bridge the gap between almost right and a perfect fit. Working with a lender who knows this program matters. 2 or 3K loans have a lot of moving parts: contractors, consultants, draw schedules, and paperwork. An experienced lender keeps it organized and sets realistic expectations up front. You still get the same FHA benefits, which are competitive rates, government-backed security, and eligible for down payment assistance if you qualify and if the lender allows it. So don't let the process scare you. The right team makes it straightforward. Housing affordability is one of the biggest challenges buyers face right now, and the 2 or 3K loan is one of the few programs that does something about it. Instead of waiting for perfect inventory or stretching your budget for someone else's renovation, you can create your own move-in ready home on your terms. HUD's updates made this program modern again: realistic budgets, longer timelines, and more flexibility. That's why you're hearing about it more this year, and why it's worth asking about it before you rule out a home that needs a little bit of work. Here's the bottom line: the FHA 2 or 3K renovation loan is one of the most useful tools for buyers in 2025 and beyond. It's all about unlocking options, building equity and turning a home with potential into a home that you actually want. And if you're ready to see how this program could work for your budget and your goals, book a call with my team using the link below. And if you want clear, consumer-first updates on the programs and rule changes that impact buyers the most, hit that subscribe button. I'll keep you informed so you can keep making smart moves.